Hi guys, welcome to another video by Optionables. My name is Saket and today in this video we are going to look at what happened to the markets today, what we can expect from the markets tomorrow, as well as what happened to our trade. So needless to say, we have been witnessing in the early days as well, and even today the market was extremely volatile. Nifty gapped down close to 2% around 16,850 and more or less it made the low for the day right then. So around 16,840 was the low, and from there on came the immediate buying, and slowly the market started heading up higher towards 17,000. So as it moved towards 17,000 again would definitely be a very strong resistance, and it again came down towards 16,900 and then started the afternoon rally. So when we look at the FII as well as GII data, FIIs have sold close to 3,000 crores whereas GII have bought close to 4,000 crores. So it is pretty evident who would have sold in the morning and how the market went up in the evening, because the data itself suggests when there is as much buying as 4,000 crores which is coming towards the end of the day, you would definitely expect the market to end higher. So again today we saw that market was taking a very strong support at 16,800. So 16,800 is now more or less a very strong support for the short term, and we can expect markets to hold 16,800 at least up until LIC IPO. So why exactly am I pointing out LIC IPO? That is because usually what happens is since this is the largest IPO, which is close to 65,000 crores, and if you want this LIC IPO to be fully subscribed, you want the sentiment in the market to be upbeat. If people are skeptical about the market and if people do not have any confidence in the market, so then what will happen is you won't receive the necessary subscription. So that's the reason it won't be a surprise if domestic institutions are actually trying to hold the market up until the IPO at least. So that will bring us to the next point of what exactly we can expect from the market tomorrow. So today, even if you look at the market, there was no specific sector which actually outperformed. There were losers in IT, there were gainers in IT. Even with respect to banking, so some private sector banks like Kotak and all outperformed, whereas SBI actually underperformed. So there was no specific sectorial action, but there was more of a stock specific action which we got to see today in the markets. So again, going tomorrow, there is still a lot of uncertainty. The surprising part is all this while there was just fear of Russia actually attacking Ukraine. But what is actually happening now? Russia has actually taken its tanks into Ukraine and the markets are going up. So even if you see DAX as well as CAC, which is Germany as well as France index, it opened close to 2% down, and right now they are trading positive. So the thing is, markets do not like uncertainty, and when there is a lot of fear and uncertainty, the markets are going to fall. So now the attack is happening. Unless this is going to go to the next extent, then markets have more or less priced in this particular attack. So if the war is going to get bigger, then we might see much more volatility coming into picture, and also the markets moving much violently. So if the things are going to get settled down post this attack, so then we can more or less expect the market to be making its bottom around 16,800. So we can definitely see this with India VIX. So this was up close to 20%, and VIX is more or less the indicator of uncertainty. So you can definitely call that, because if the VIX is high, then there is a lot of uncertainty. The market is expected to be very volatile. If the VIX is low, then the uncertainties are low and the market is expected to be stable. By saying that, now we will see what we can expect from the market for this particular expiry as well as tomorrow. As discussed in yesterday's video, again we saw 17,000 as well as 37,000 both being held in Nifty as well as Bank Nifty respectively. But I had also mentioned one more thing, that if the war actually breaks out, like now we can see that some of the Russian soldiers have actually started entering, and there are also some firings happening from both the sides, and UK has also imposed some sanctions on Russia. That is, 5 top banks of Russia have been imposed sanctions by the United Kingdom. So the thing here is, When such news flow is coming continuously, it's more of the sentiment driven market rather than data driven market. So now on the charts I can say this is the support, this is the resistance. Based on OI also I can tell the support and resistance, but that is not going to be held. It is more about the sentiment which is going to prevail over the data in such situations. So that's the reason right now the VIX is high and the option premiums are also extremely high. So if we are taking simple option trades, then something like a ratio spread would be really good. That will give you a very good risk to reward as well. With that, now we'll move on to what exactly happened to our trade and how we actually navigated through this volatile situation, because the market was extremely volatile. It was down 200 points, later went up 150 points, came down 100 points, and from there on went up close to 150, 200 points further. In this situation, trading intraday is a very hard task, because the thing is, when you put a stop loss, one stop loss gets triggered and you're now confused what to do with the other leg. Should you book the other leg or hold on to the other leg? You have very little clue about it. So the best part is when you start getting profits, you just start booking the profits and take out as much as possible. So we followed a similar approach today, and whenever we got some good profits, we were able to book it, collect it, and again enter a new trade. So let me be showing you that in the video recording today, and with that we'll now be moving on to the video where we'll be looking at what actually happened to our trade. And overall we ended with a profit of close to 2.2 lakh. Before moving on, if you're liking the content on this channel, do not forget to hit the like button, share this video, as well as subscribe to Optionables. Also in the comment section, do let us know what do you think about the markets, where you are expecting the markets to be headed, and also what happened to your trade today. So we would definitely love to know that as well. Thank you so much for joining. So we came back around 1:30 and I started recording the video by 1:45, 2 o'clock. So now I'll be showing you first of all what exactly happened to our positions. So today we booked a total profit of 2,44,000. So this is also including our positional trade. So positional trade didn't give us a lot of profit. It gave us somewhere around 60,000-70,000 rupees profit. And the intraday trade gave us the major chunk of the profit. So somewhere close to 1.6 to 1.8 lakh. So now let's discuss in detail as to what were the trades we took and how exactly we managed the position. Around 9:30, I entered a 16,900 short straddle. As soon as I entered, the market started to shoot up. So this particular up move was fine and the market was more or less consolidating here. And as the market moved towards 17,000, this is when my C stop loss got triggered. When the C stop loss got triggered, so I was pretty skeptical about holding my put leg, because one, there is a lot of uncertainty. Two, morning itself we had seen a huge sell-off. 17,000 also is a very important psychological level for the market. So I thought, let me just book my put leg also with a profit of 5k. So just with 5,000, I was out with the entire position. So after this, what happened? So anyways, I'm out with all the position. I just have around 5,000 rupees profit. So that's the reason I entered 17,000 short straddle, a fresh new short straddle at 17,000. So now again what happened? The market started slowly coming down, and at this particular point, the stop loss was triggered. I was not comfortable holding the positions at all, because the market is very volatile. Again, if it comes back, I'll be triggered stop loss on two sides. So at this particular point, I again booked all my position at a loss of 10k. So first I booked with a profit of 5k. Next I booked with a loss of 10k. So overall, right now I'm sitting with a loss of minus 5k. So at this particular point, what I end up doing is I enter a 16,900 short straddle. So with that as a context, from here I also have the recording. So let me just play the recording. So you can see the time is around 2:09 and I'm just sitting with a small profit of 19,000 rupees. So you can see two things here. The market has slowly started to come up. It is around 17,035 and even Bank Nifty is slowly recovering. So here I have done a very simple short straddle in Bank Nifty. So I just give it pretty quickly as well. And you can see that 16,900 call leg has been triggered and I only have the put leg with me. So my idea is the moment it falls below 17,000, I'm going to close my put leg as well. So I just let it run as much as I can. So let me just quickly move ahead in the trade. So you can see at this particular point, I still have the same legs left. That is 16,900 plus a 37,500 short straddle. And the thing here is I have moved from 17k M2M to 77k M2M. So why did this actually happen? The reason to this is pretty simple. This particular leg, so the market actually started to shoot up. You can see from 17,030, it has now come to 17,130. While the market was shooting up, this put leg from 94 became 70. So I had close to 2000 quantity of this put leg. From 94, it became 70, and this gave me the major chunk of the profits. So now, after this, I sort of started to feel the upside from here might be limited. So that was one reason. And the second reason was I also felt that I have already realized close to 70k M2M. From here, let's say the market shoots up even say 100, 200 points. So it is okay to lose out on some profits, but I don't want to risk what I have already made. So that's the reason the moment we hit 70k, I decided this is a good time to enter a counter trade. So counter trade is one of the adjustments which we do. So the market had already shot up. So I decided, okay, this is more or less the right time to enter the counter trade, because the idea is I have to protect my profits. So what is a counter trade? I go and end up shorting a call option. Right now I have a naked put option. So I go and end up shorting a call option, which is almost half the premium of this particular leg. So I end up doing that. So let me just quickly move to that part. So you can see I end up shorting 17,400 calls. And here I have shorted 17,400 calls at around 46 rupees. So this is around 76 rupees. This is around 46 rupees. And the market actually ends up coming down. So let me just move little ahead. So you can see as I move ahead, at this particular point, I square off my Bank Nifty legs, and you can see this counter trade alone gave me close to 30,000 rupees profit. So without this leg, I would have had an M2M of close to 70k itself. But just because I added this counter leg, my M2M shot up to 1 lakh. So now I decide, okay, anyways, I have made around 1 lakh. Let me just end up booking all the positions and close all the trade. So at this point, I book all the positions and I close all the trade with exact profit of 1 lakh. So after this, what I end up doing, you can see the time is still 15:2, which is 3:2. I end up adding a short straddle at 17,100. So let me just move little ahead. So you can see that I have added a short straddle at 17,100, and around 320 I end up exiting the entire short straddle. So I add around 5,000 quantity and I exit the entire short straddle around 320 at a overall profit of 1,23,000. So the thing is, I just don't end my trade here. So I feel that the decay was happening. So I feel, okay, since the decay is happening, let me try to make the best use of it. But the issue is I can't punch any orders in intraday anymore because the time is already around 3:22. And if I punch in intraday, the orders will get squared off. So that's the reason this time I resort to trading in regular. So here as I move ahead, so you can see that these are my regular positions. And here I end up adding a simple short strangle, 5,400 quantity. So around 329, exactly towards the end, I end up squaring off this entire short strangle with a profit of around 25,000 more. So overall, we book around 1,60,000 from intraday and around 80,000 from positional. So overall, ending the day with close to 2,44,000. So this is how we managed our intraday. So 2 times we ended up booking the position as soon as one stop loss was triggered. The other time we let the leg run as much as it could, and later ended up adding a counter position. So that's how we more or less were able to manage this volatility and book a profit. So let's see what happens tomorrow, and let's also hope for the best. The market is again expected to be pretty volatile. Let's see how the trading will go as well. So with that, we also come to the end of this video, and if you have liked this, please do hit the like button, share this video, as well as subscribe to Optionables. Thank you so much for joining.